Today I'm revealing the 10 financial commandments, proven principles that protect your money, cut taxes legally, and set you up for long-term wealth. If you've ever felt like you're working hard but never getting ahead, this video is for you. I'm Gary McDermott, co-founder of ProGrowth Solutions. We help business owners, investors, and professionals maximize wealth through tax reduction, entity structuring, and growth strategies. If you're serious about reducing your tax burden and building long-term wealth, I invite you to claim your complimentary tax strategy assessment. Most firms charge up to $1,500 for this, but we've chosen to offer it at no cost, so you can experience firsthand the power of proactive tax planning. 42% of Americans have less than $1,000 in savings. 13% of people over 60 have zero retirement savings. Student debt has now surpassed $1.7 trillion, higher than both auto and credit card debt combined. Meanwhile, millions are unknowingly leaving money on the table due to overlooked deductions, hidden tax strategies, or poor financial habits. These aren't just numbers. They represent families living paycheck to paycheck, one emergency away from disaster, while savvy entrepreneurs turn the system to their advantage. Commandment number 1, live within your means. Your lifestyle should always fit your income, not your credit cards. Lifestyle creep is a silent wealth killer. Promotions, bonuses, or side hustles often lead people to immediately upgrade their homes, cars, or spending habits, leaving them no better off than before. Sophisticated entrepreneurs live below their means, allocating a significant portion of income to savings, business reinvestment, and tax-advantaged accounts. They know that by controlling lifestyle creep, they gain leverage for opportunities others can't even touch. Track your spending, set hard limits for discretionary expenses, and always pay yourself first. It's the foundation of lasting wealth. Commandment number 2, understand good and bad debt. Not all debt is equal. Productive debt is borrowed money that generates income or increases net worth, like financing a rental property that cash flows, investing in your business, or leveraging equipment that produces revenue. Destructive debt is borrowing for items that depreciate quickly, like luxury cars, vacations, or credit card balances at high interest. For example, a $150,000 luxury car at 20% interest can end up costing more than double its price over time, while the same amount invested in a business asset could generate steady cash flow. Wealthy individuals consciously use debt as a tool, while most people just accumulate liabilities. Commandment number 3, stay out of destructive debt. Once you know the difference, the rule is simple. Avoid and eliminate bad debt. Apps like Buy Now, Pay Later may feel convenient but are proving to drive defaults among everyday consumers, even on small purchases. Use the debt snowball method. Pay off the smallest debt first to gain momentum, then roll those payments into the next liability. Entrepreneurs structure their credit strategically, sometimes using low-interest business lines of credit for growth while paying off personal debt aggressively. Each cleared debt becomes financial ammunition for bigger investments. Commandment number 4, don't ever raid your retirement. Retirement accounts are meant for retirement, not college tuition, medical bills, or credit card payments. Early withdrawals not only incur penalties but also destroy decades of compound growth. Millions who withdrew 401ks during the pandemic are just beginning to realize the cost. Wealthy individuals leverage legal strategies like backdoor Roth IRAs, solo 401ks, or SEP IRAs to maximize contributions and reduce taxable income, ensuring their money works for them instead of the IRS. Protect your retirement like your future depends on it, because it absolutely does. Commandment number 5, be smart about student debt. Student loans can be a tool or a trap. Borrow wisely. Never exceed your expected first-year salary in your field. For instance, a new nurse earning $60,000 shouldn't borrow $120,000. Entrepreneurs and high-net-worth individuals often use education strategically, funding degrees or certifications that have a measurable ROI, and pairing them with tax credits, employer tuition benefits, or income-based repayment plans. The goal isn't to avoid debt entirely, but to ensure every borrowed dollar increases wealth. Commandment number 6, develop a habit of saving. Saving isn't optional, it's survival. The easiest method is automation. Treat savings like a bill that gets paid first, not last. Start with a $1,000 emergency fund. Capture employer retirement matches. Fund Roth IRAs, HSAs, or other tax-advantaged accounts. Entrepreneurs often redirect tax savings into investment vehicles, compounding wealth faster than the average taxpayer. The less you pay in unnecessary taxes, the more you can invest, reinvest, and grow. That's why our free tax strategy assessment is crucial. Discover deductions, credits, and strategies your CPA might have missed at no cost. Just go to ProGrowthSolutions.com. Commandment number 7. Be financially stable before investing. You don't need to be rich to invest, but you need stability. No high-interest debt and some emergency savings. Many over-leveraged investors lost real estate and stock positions during interest rate spikes in 2023, while financially prepared entrepreneurs turned the same environment into opportunities. Stability allows you to take calculated risks with confidence. Focus on creating a foundation that can weather market swings before you dive into complex investment strategies. Commandment number 8. Don't quit your day job too soon. Quitting your job to follow your passion sounds exciting but is often reckless. The wealthy build side businesses while maintaining consistent income until it reliably covers expenses. The typical taxpayer quits too early, burning through savings or racking up high-interest debt. Aim for 6 to 12 months of stable business income before leaving your day job. It's the difference between sustainable growth and financial disaster. Commandment number 9. Continue your education. Financial education is ongoing. Read books, attend workshops, join mastermind groups, and learn from people ahead of you. The wealthy implement what they learn immediately, while most people just consume information. For instance, learning about advanced depreciation or business entity structuring can save tens of thousands in taxes annually if you take action. Knowledge without action doesn't change your life, execution does. Commandment number 10. Money mindset matters. Money isn't just math, it's mindset. Scarcity thinking keeps you stuck, while abundance thinking opens doors to solutions others don't see. During inflation spikes, some panicked and sold assets at a loss. Others, with a long-term mindset, rebalanced, invested strategically, and grew wealth. Your mindset shapes your financial future more than any paycheck. Drop in the comments which commandment you're taking on this week. And if you found this video valuable, don't forget to like, subscribe, and share it with someone who needs to hear this today. It really helps more people take control of their finances. When you're ready to go deeper, don't do it alone. Claim your free tax strategy assessment at ProGrowthSolutions.com. Together, we'll uncover hidden opportunities, optimize your cash flow, and put proven strategies to work for you.